What's going on, traders? Hope everybody's having a great weekend. My name is Shark. Thank you so much for joining the channel and the video today, as we're going to do some analysis for the upcoming week of trading on the E-mini S&P futures as well as the NASDAQ 100 NQ. We'll also take a look at some ancillary data points that I like to use to help me gain a non-biased perspective and game plan for the upcoming week of trading. If this is your first time joining the channel, again, thank you so much. And remember that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. All right, as we do with every video, let's start off by looking at the economic calendar for the week. And we are in the middle of earnings season, so we'll take a peek at the earnings calendar as well. But first, let's start with the economic calendar here for the week of May 5th. All right, not too much really going on. Monday, ISM services, 10 o'clock. Final PMI services, 9:45. But we do have FOMC on Wednesday, May 7th. So that is going to be big. And of course, the speech at 2:30, and see what Powell has to say about the economy and the market overall. Consumer credit also coming in at 3 o'clock later in the afternoon. Thursday, initial jobless claims, 8:30. Be paying attention to that. And it looks like we have some Fed speak on Friday the 9th. Barr speaking before the market opens right around 5:55. Then John Williams speaking at 6:15 in the morning. And we also have Krugler speaking at 6:45. At 8:30 before the market opens, Tom Barkin going to have some remarks. And then we also have Waller and Williams on a panel at 11:30. When the market is closed, Fed Governor Cook will be speaking at 6:45. A little bit more Fed speak at 7:45, but the market, of course, will be closed at that point. All right, with that out of the way, let's take a quick look at the earnings calendar for this upcoming week. We've got PLTR on Monday after the close. I know that one will be interesting. Celsius on Tuesday before the market opens. AMD, definitely paying attention to that on Tuesday after the close, as well as SMCI at the same time after hours on Tuesday. Uber and Disney Wednesday before the market opens. Carvana and ARM on Wednesday after the close. DoorDash as well. Shopify Thursday before the market opens. DraftKings and Coinbase both reporting on Thursday after the close. And then Friday looks pretty quiet. So a couple of names, really the ones I'll be paying attention to, probably ARM, AMD, Disney, but nothing really that's going to be a huge mover. I think we could get some reaction off of NVIDIA from what AMD does, so we'll just be paying attention to that on the semiconductor front. Also here, wanted to mention Hims and Hers, also Monday after the close. All these kind of cult names reporting this week. But we already did get through a few of the big names with Apple, Amazon, Meta, and Microsoft reporting last week, and that helped drive the market higher with the reports from Microsoft and Meta. All right, so let's get into a naked chart here on the weekly and see what we can take away. And actually, you know what? Start of the new month, so why don't we take a peek actually at the monthly chart here and see what the candle for April ended up closing. You know, a dragonfly doji here, and really, you know, the bulls held where they needed to hold, right? And we've been talking about that potential monthly higher low being put in right at this huge back test, and that's pretty much what it looks like we got here. And I was getting a little concerned. I remember when we, in the beginning of April, I had mentioned, you know, now we had this monthly candle below the 20 period moving average, which we hadn't seen in a while. And I was a little unsure if In fact, they were going to close that month below that monthly 20, but as obviously as we can see, bears were not able to, and price was pushed up back higher. So structurally speaking, from the monthly, everything is looking good here. Bulls held where they needed to hold, and in fact that higher low scenario may be taking place. We are just below the monthly 9-period moving average here at 57.17 half, so that is important, and we'll see if this month we are able to get back over that and continue up higher. All right, now let's get into the weekly chart and see what we can take away from that perspective. Okay, here we are on the weekly chart now, and coming right up here on ES, an non-committal close over the weekly 20-period moving average, just right above. We certainly could fail back below this, so I'll be paying attention to that. But really structurally, what are we looking at here, right? We gotta see, and here we are back to, when we started to really have that breakdown, right? We're coming in and retesting this previous area of structure, and this is really what started that downtrend when we broke this balance here, and that's obviously what gave us the displacement to the downside from this weekly break of structure. But now we're almost there, retesting. So this area here, we've been over the talking about those lows from the weekly week of January 13th being really important, and here we are again getting close to that area once more. Will the bulls be able to totally push us up into that? Well, we will see how this 20 reacts, but normally we would say looking for moves back up into the structure. Now what happens there is anyone's guess. Do we find some resistance and some sellers there? Well, that certainly is possible. But as far as everything's looking, really, the bulls have done everything they've needed to do. We've talked also about in the last video the highs, right? Kind of this double top. It's a little bit clearer of a double top, but the highs from the April 7th, the week of April 7th, and the week of April 14th, right? That's what the bulls needed to recapture, and they definitely have done that. So another thing that they obviously did here was recapture this double bottom. That was also key from right back in August and September. Oh, it looks like September 9th and the first week of September. So they were able to do that, shifting now the market structure a little bit more bullish. So from this weekly perspective, we can still pull back even to here and then head back up higher. Yeah, we could even come in a little bit lower and come back up higher. If we start to see price break back below these lows from back in September, then we're going to have a little bit of a different story on our hands. But as it stands, we are, as far as the bulls are concerned, they are good to go in my opinion here, and certainly things are shifting in their favor. So the next big test, as I mentioned, of course, is going to be those lows from back here in mid-January. So that's the next thing that we're going to really have to pay attention to. And if that in fact can happen, if they do recapture, I really would not be surprised to at least make an attempt to get to the previous balance highs and back up at that 6160s area. So that will be very interesting to see what happens. Okay, let's actually pull out some of the levels that we have been working with here on the weekly chart and see what we can take away from that perspective. Let me make these a little bit bigger. Okay, so here you can see the supply zone here now. That's going to be very important, as we just kind of went over. And here we are, okay. The lows from the week of the 4th from November, and basically the last week of October of 28th. It's going to big area here, right around that 57.20, I'll call it. And it's pretty much lining up right here with their weekly 20 as well. So it will be very interesting to see what happens Monday. Now we've had two really strong green weeks to the upside, with a nice range during that whole week. So, from this perspective, even if we pulled back into 56.45, 56.50, still a-okay. Even coming back into 55.88 area, still okay for me for the bulls. And like I said, when I start to get a little bit nervous is if we start to break and the sellers are able to find acceptance anywhere underneath 5500 to 54, we'll call it 54.55. Okay, then I'm getting a little bit more nervous about that potential downside. Certainly underneath 5400, 53.87. All right, I think it would be pretty likely we'd go all the way back down to 5200. But as it stands, the ball is in the bull's court, and we can pull back. Any of these scenarios could be possible. And this is, probably the last one that you would really want to see. We could potentially double top there, but that is, I'm not 100% sure, of course, how price is going to go. But either way, 5,500 is going to be the key there of what we need to hold. And if we did come down and pull in this far, I think that would be very interesting. If that started to happen and we started hanging out down here and price couldn't really break up higher, well, then we might have to get a little bit more cautious on that bullish stance. But from the weekly perspective, everything is looking good to go, more or less, in my opinion. Okay, let's take a look at the daily chart right now and see what we can take away. Let's look at the daily chart levels. Okay, coming right into that yearly VPOC at 56.88. Okay, just above that, but again, here you can see the 57.13, 57.15, 57.20. We've talked about this area right on the weekly chart, so we know this is big. We have seeing it again here on the daily, so we really need to get back up over the 57.20, 57.15 for a chance to push us up higher. I would say 57.50, 57.65 on the daily level would be next for the bulls. Getting over that, basically the highs from the start of the month, April 2nd, if we get over those highs there, right around 57, we start seeing some closes, 57, 57, 57, 75, I think we'd be pretty good for 5800, 5810, and then we'll see about matching these highs from back at the end of March up at about 58.30, thereabouts. So that would be the next level. Now, what about for the bulls for the bears from this perspective on the daily chart, right? Well, we're still going to be monitoring basically 5,600, 55.90. I think we can see here we've had a couple of reactions on the daily chart. Once again, if we break down, we could come down some sell side right here, 55.50, definitely possible. Small gap as well that could potentially open up. Well, and I will say from the daily chart perspective, we are a little bit extended, right? We closed right up by the highs, and you can just see the amount of space from here all the way to the 9, to the 20, a bit extended in my opinion. So I would definitely watch out for consolidation and or just sideways action. This could end up happening like so. Maybe we set up a bit of a daily bull flag for a move up higher, but we could also potentially trade and consolidate a little bit lower. But as long as the 5,600 holds, I don't really have a problem from the daily chart perspective. I just don't know how far that range of consolidation will be, but we've got a zone here that we can potentially work with, right? So over that 57.15, 20 area, okay, we can be looking for higher prices on the daily. Under 5,600, well, watch out then. 55.30, I think, could be very possible. Maybe that 55.50 area, as I mentioned, this sell side here, the lows from the 13th of March, potentially, and kind of right in the middle of this small gap, even if you want to call it that, back the highs from the 3rd of April, and which is pretty much the low from that previous day on the 2nd of April. So we'll see what happens there. All right, let's get into some day trading levels now and see what we can take away from this granular perspective. And let me remove this trend line. Okay. Okay. All right. Okay, so from the daily chart, from the day trading perspective, what do I need to see here for the bulls? As long as we hold 56.75, 56.77, we are a little bit outside of 30-minute value here on the 10-day chart, but as long, you can see right here, the double top, this is really what shifted the market structure again. So as long as we hold this 56.75 area, I really have no problem with the long trade still. We do have the 20 sitting at basically 5,700, so it's not that far away from where we closed. But even if we pulled back, just structurally speaking, as long as this area holds here, everything is fine, in my opinion, for the bulls. And preferably, I would love for the market to pull back into that area, giving us a bit better risk to reward for the long trade back up towards these equal highs, and then potentially up higher. As we already mentioned, 57.15, 57.20, big area right here. Have it marked off. We went over that on the daily, weekly levels, of course. And then if we can get over, well, what about 57.45, 57.50? That I think would be the next zone. Anything over that, 57.65 is my next target for upside for the bulls. So we could potentially reject here, then come up, and come back down, do something like this. But we'll see. Now, what do the bears need to do, right? Under that 56.75, well, then I think they're a little bit in trouble. We could see us trade back down 56.30, maybe into that Friday 4 o'clock low, or 56.28, anywhere at the bottom part of this range. Very possible. And actually, even here, I could move this down just a little bit. There we go. So under 56.75. Watch for these lows. We could, I'll just throw out the level here. Right, 56.40, 56.35, all the way down, 56.20. So about 10-point little area here, the bottom of this balance, that I think we could potentially trade down into. An even smaller, if we wanted to get real granular with it, even smaller market structure shift right here. Oh, it's a little too low. Right in this area. Right, and that takes us 56.50. So that could also be supported, but I certainly would say underneath that 56.30 or 56.50, it would be more likely that we would trade down. But we could, I just have to mention that we could stop there. And, I think I'm going to pull out a little bit of a level there, but I'm going to make it look a little different just so I can have that differentiated. Okay, and if we break underneath the 56.28, I'm going to call it 56.25, right? If we break under that, well, then watch out. I think we could see sells down back towards 56.18, 56.15, under that 56.05. Then we've got the figure to deal with, 5,600. And we already were kind of talking about that from the daily perspective. Under that 5,600, start to get a little bit more cautious, not completely, but a little bit more cautious. However, right here on the 30-minute, We do have the 200 period simple moving average right underneath. Where is it actually sitting? It's going to tell me 56.01. So it's basically sitting right there at the figure, and I'm sure, especially if we consolidate a little bit, this will just drift up, of course, slowly a little bit into that confluence right there. So either way, that 5600, if we do see a sell, could be a really nice pickup point for longs, in my opinion. Okay, and under that 5600, well, then we could hit down to that 5585, 5582, 5580, somewhere in that range. So pay attention for that. Okay, that's pretty much everything I wanted to go over for the E-mini S&P futures. Let's get into the nasty NASDAQ here and see what we can take away. Let's pull back up let's do a monthly chart just to take a quick peek. Okay. All right, same scenario with the structure. We've already been over that. Okay, now look at this. Now the NASDAQ, probably because of Microsoft and Meta, although even Apple didn't really look too good. And I believe Amazon fell as well. But all that being said, NQ showing a little bit more strength, actually starting to get over that monthly 9-period moving average right at 20,086. So that is interesting right there. But yeah, we're about 200 points, a little bit over it. So got some room to work with there, but I think it could potentially fail. All we need is one red day or one day for the sell algo to be on, and it wouldn't be too hard for us to get back below that. And what could end up happening is that we get trapped here on the monthly, right in between the 20 and the 9. The 20 right now is sitting at 18,944. So let's watch out for that. We could get stuck and see price kind of hang out in this range in between these two moving averages, but it could end up just kind of surfing right within those moving averages like so. So that's definitely possible as well. But really nice showing here from the bulls. We still are a little bit, we're not overbought anymore, but they are still a little spicy on the monthly. Not as much of a reset as I really would have liked. But what I do like, and the same thing is finally happening on ES, we're finally seeing that momentum shift here coming out of the oversold conditions, and now we're starting to see a little bit of green, a little bit of bullish momentum coming in finally here. And we were watching that on the daily chart when we noticed it over here, and you can see obviously what happened. Now it is worth mentioning on the daily, and I'm pretty sure ES is like this too. I forgot to look at it, so my apologies. But here it is on the NASDAQ. We are getting a little bit overbought already, so I've gone kind of full circle here, getting overbought readings at 11, positive 11.66. So not too extreme, but definitely getting up there right now. So interesting here, I have to say that the 200 SMA is lining up right with the VPOC, sitting at 20,655 basically. So that is a nice, interesting confluence. And it seems to me, though, that as long as we really hold these value area lows on the 1 hour, on the 1 year, 1 day chart, then, and that's all the way down to what are value area lows, 19,620. We probably gonna make a shot for back up at 20,500, and I'll be interested just to see what the 3-year profile looks like. So yeah, the 3-year profile, we are actually back above value area highs here, but nice showing for the bulls back over the 9 and 20 right here. Boom. All right, let's get back to the weekly. Same situation right? We had our balance, weekly balance breakdown. We've shifted market structure right here. Coming over the weekly 9, of course we're over the 9, but coming in a little bit over the 20, a bit more committed than the ES was. But what I also like is that we have recaptured, definitely more committed of a recapture of these double bottom lows right here. Back from that same week, right? November 1st or November 4th and that last week of October. So that is good. So as long as the bulls are able to hold over that, I think that is looking pretty constructive. And it's right, it's basically 20,000, right? 20,010. If you want to know for sure, yes, 20,013 and 20,008. So we can just call it 20K. So from the weekly view, as long as 20,000 holds, and as long as 19,400 holds, I don't really have a problem. If we pull back, we can still head up higher to come in and retest that big zone. It's going to be the next test for the bulls, right? So we'll see what happens there. Right, and that's that structure breakdown. Okay, let's take a look at weekly levels here. You can see the supply zone I was already talking about. Here's the double bottom that we've recaptured. Okay, and the previous week's low, all key. And you could really, make a bit of a supply, or well, was supply, now demand zone right here for that structure shift. Right. So as long as the previous week's low holds, there's no issue. Probably see about this previous weekly high, the 24th, which is 20,535, 36 area. Especially, I'd be very confident in that, pretty confident in that, as long as we hold over that 20K. Could have some issues at the lows here because we do have a bit of a double bottom right around 20,380. So certainly over that. Just watch the weekly lows from the 24th of February and the highs from the 24th of March, those weeks. Okay, let's get into the daily chart here. All right, so bulls, what do we need? From the daily chart view, hold 20,650, 20,065, 20,050. As long as we can hold that, I think we're good to go. Really need to confirm over 20,190, basically 200. You might as well just call it 200. Basically where we closed, right? Need to hold over that. And if so, we could go up back to that 300, over 20,300. Well, then look at the matching highs here, 26th to 25th, back to that 20,500 area, which we just went over. So we'll see about that. Anything over that, well, then I'll be watching basically to see if we can retest the 200 SMA as well as the 1-year value area highs at 20,675, 680 right here, and also some confluence there with the 200 simple period moving average. Could see some sellers in that area as well. So that's just something that we want to pay attention to. But now for the for the Bears. Certainly if we start to get back below the 9, the daily 9 sitting at 19,535 basically. Break under that, but I think what opens up the door is under the 19,700. Underneath that kind of opens the door, but we do have that daily 9 there, so I'll be paying attention to that. Really the main thing, the big double top, right? This is the structure shift right here that we broke over 19,400. Anything under that, I think that starts to really open the door for the sellers. But the first thing is going to be the 19,700, 300 points down to 400. Under 400, we can come back into the 19,280s. Maybe we just stop at the figure at 19,300, very possible. But we do have nice confluence with that 19,280 area. The daily 20 period moving average is hanging out right there as well, so it could be a nice pickup spot. But underneath that 20 period moving average at 290, well, then 19,145. Underneath that, we can see sells back down to 1900. Under that, 50 more points down, 18,850 would be my next zone here coming in. So we would have to sell underneath this, underneath that, and down like so. If we can hold here for the bulls, then we can try to make them move up. Oop. To the 300, over 300. Boom, we'll come into that big daily level at the 530s, 500s. But this area here is going to be what opens up. You can see a lot of contention. We did dip a little bit lower a couple of times to 19,600. So really, you could even throw in just a little zone here. And I believe that is valid. And it locks in with the value area lows as well. Here. Which, right there, it's like 19,600, 19,620, right? Okay. Let's take a look at some day trading levels. Okay. Now, nice confluence here, 20,135. Pretty much lining up with the 30-minute 20 period moving average. So, for me, as long as we hold that, right, this previous high here, as long as we hold 20,130, 135, we are good, in my opinion, for the bulls. Got to get up over 20,240, except over that 240. We'll look for Friday's highs in the 270s. Over the 270s, we'll see at 300, over 300, 340, underneath, over 340, 20,340. Okay, we can make a move into 20,400 over that 20,430, 420 area is my next target for the bulls. And that, of course, nothing goes in a straight line, but I'm just going to draw it as if. Boom, maybe we get a rejection, right? And that would be the path. Underneath 20,130, well, then look out below. I think we could trade back down and test the figure. 20,000, 15, 20,000. The key area, we already talked about it. Huge psychological number. Nice reactions there. So under 20,000, watch out, we'll sell down probably to the lower part of the range here for our balance box. Potentially, I'm trying to see. We may stop at 19,900, but if we break under 19,900, then I think that the 19,860 area would be possible. It seems to me we do have this little area here, so I'm going to mark that off right there, 20,900. Okay, beautiful. All right, so breaking under 20,000, watch out. I'll draw the path, look for the retest, and back down here. Maybe we get a bounce again, and then maybe we break here. Underneath 19,860, 850, well then I think we can really see the sells back down. 19,800, very possible into that area, this previous balance zone right here. We could come down into that zone. Underneath 19,800, I'll see you at 19,750. So there you have it. Okay, that's all I wanted to go over for the major indexes. Let's do a quick run through of some of our other data points. Let's take a look at the 1 year VIX, or the 1 day VIX. Okay, we've got to get underneath 15. We can see that compress. Nothing really going on with the yield curve. Let's look at the market breadth here. How many stocks in the S&P are trading over their 50-period moving average? And lo and behold, wow, look at this. Coming from the depths of Mordor, we're back over 50%. Not by much, a little uncommitted. 54% of the stocks in the S&P are trading over the 50-period moving average. That is a great sign for the bulls. We've clearly broken this downtrend here. As long as we can hold over that 50%, that is looking great. 200-period moving average, a bit slower, obviously, but we're over that 36%, 35% threshold. All being equal, we can make a run up probably to 45%. Let's see if we can get over that 50% on the 20 period. That would be good. A little spicy here. Of course, this isn't a stock, but we are a little bit overbought here. We're starting to get a little overbought, just like on the daily. So just a little bit of caution there for some pullbacks potentially. New highs versus new lows. All right, this one's not as impressive. Yes, we are over the zero line, but only by 33. So yeah, but over the zero line, definitely better than where we were down at negative 1100. So, okay, happy to see it over the zero line there. All right, let's look at the junk bonds. Any divergences? Not really, kind of flat. I will watch the S&P though coming up into this big major trend line. That is interesting. So a little bit of caution there, because certainly could see this happen, some type of rejection. But it's fine as long as SPY holds over 20 points. So what is this? 548. As long as it holds 548 half, it's really no issue. Okay, let's look at the put to call ratio and the VIX. Put to call ratio getting crushed. VIX. So that's back in balance at our normal 70, 75 reading. VIX tried to push up into that 28 area, was unable to do so, confirming underneath 24 here. So if VIX breaks underneath 22, it's going to be pretty bullish, and we probably will see back down towards into the high 20s, and then maybe underneath that back to $20 VIX. So, but if it can hold 22, yeah, we can bounce around into between that and 23.5. Getting back over 23.5, we'll see VIX back up around in the mid 24s. But I think it's probable that we just kind of stay stuck. But it's either going to be, up and over or down and under. Right? Let's look at the bonds real quickly. Okay, bonds selling off a little bit. Could not. We were talking about TLT here. Couldn't get over that 90. Back down underneath the 88. Bonds need back over 88, 88.45 for hopes to get back up into these equal highs. As long as they stay under 88.40, they're probably going to come back down to 87. Looks like that's where they want to go. And this is rates moving up. Let's look at the credit spreads really quick on the corporate bonds. Corporate bonds getting rejected here. I'm not a fan of this divergence. Higher high here, corporate bonds coming down, but risk settling a little bit on the spreads. That is good. Now we can kind of maybe make something like this here, but they're definitely cooling off, so more of a risk on environment there. But this is one slightly bearish data point for potential divergence coming in. Any divergences on the Dows, the transports? Well, they're both making higher highs. Not really anything there that's too concerning. A dollar in the yields probably popping back up a little bit. Yep, they held basically the 42, got a little bit below 42, but held 42 back over 43. Over 43, I'm a little bit nervous, but we still can go a little bit higher. 43.6, anything over that, then watch the yields come up once again. And the dollar, right, it held that 99 area, broke just a little bit below, got back over, rejected that 125 cents, came back again, retested. So if we can find some confirmations over $100.25, well, then I will see you on the dollar back up at 100 and almost probably 101, right? 185 cents would be the next spot that I'd be looking at. Something like this, or we're going to break below and head back lower like that. Okay, let's see. Oh, that's not what I want to look at. Take a peek here. Oh, skew is pretty much flat, nothing really going on there. Okay, I think that's about everything I wanted to go over. A quick one today. Really appreciate everybody joining me for this review and prep for the upcoming week. Remember, a prepared trader is a profitable trader, so plan those trades and trade your plan. Thank you so much. If you haven't already subscribed to the channel and you enjoyed the video, don't forget to subscribe, turn on those notifications so you won't miss another video analysis on the markets. All right, guys, I hope you have a great rest of your weekend. Happy trading, be safe, and stay smart. All right, take care.